The global trade landscape is once again overshadowed by uncertainty. President Trump's recent pronouncements on China have sent shockwaves through international markets. His suggestion of reimposing tariffs on Chinese goods has reignited fears of a trade war. This comes after a period of relative calm, where both sides seem to be edging towards a settlement. Trump's rhetoric has been characterized by its usual unpredictability. He has oscillated between praising China and accusing them of backsliding. This inconsistency has left analysts and investors scrambling. Adding to the confusion, China has chosen to respond with calculated silence. The stakes are undeniably high. A trade war between the world's two largest economies carries significant risks for both sides. Businesses are bracing for disruptions to supply chains while consumers face higher prices. The situation remains fluid, with each day bringing fresh pronouncements. The current impasse underscores the fragility of the global trading system. It also highlights the challenges of navigating complex geopolitical and economic relationships. As the situation unfolds, the world watches, hoping for a resolution. To understand the current trade tensions, it's crucial to examine the Trump administration's approach to trade policy, particularly concerning China. Since taking office, President Trump has viewed trade as a competition, often characterizing it as a zero-sum game. This is evident in his frequent use of tariffs to exert pressure on trading partners, particularly China. Trump's tariffs on Chinese goods and China's retaliatory tariffs mark the beginning of a tit-for-tat trade war. Proponents argue it's necessary to address concerns about China's trade practices, like intellectual property theft. They contend tariffs level the playing field and protect American jobs. Critics argue tariffs harm American businesses and consumers, failing to address the trade imbalance. They point to higher prices, job losses, and decreased business investment. The use of tariffs has created uncertainty and unpredictability in the global trading system. The uncertainty surrounding the US-China trade talks is palpable in the world's financial hubs. Stock markets, often seen as barometers of economic sentiment, have been on a roller coaster ride, reacting sharply to every headline and tweet related to the trade war. The initial imposition of tariffs by both sides led to steep declines in stock prices, reflecting investor anxieties about the potential for a protracted trade war and its impact on global growth. Subsequent periods of optimism, fueled by signs of progress in trade talks, have been met with renewed pessimism when those talks have faltered or when President Trump has made unexpected pronouncements. This volatility underscores the high degree of sensitivity in the markets to the US-China trade relationship. Investors are keenly aware of the interconnectedness of the global economy and the potential for a trade war between the world's two largest economies to derail growth. The uncertainty is not limited to stock markets. Businesses, particularly those with significant exposure to the Chinese market or those reliant on global supply chains, are also feeling the pressure. Many are delaying investment decisions, putting expansion plans on hold, and bracing for the possibility of further disruptions to their operations. As the Trump administration continues its unpredictable course on trade, China's response has been a study in strategic ambiguity. Rather than engaging in a war of words or mirroring Trump's impulsive style, Beijing has opted for a more measured approach, carefully calibrating its responses to maximize leverage. China's silence, however, should not be mistaken for weakness or acquiescence. Beijing is acutely aware of the stakes involved and is pursuing a multi-pronged strategy that seeks to mitigate the impact of US tariffs while simultaneously strengthening its own position. Domestically, China has implemented a range of measures to support its economy, including fiscal stimulus, tax cuts, and efforts to boost domestic consumption. It is also looking to reduce its reliance on the US market by diversifying its trading partners and expanding its economic ties with other countries. On the geopolitical front, China has seized the opportunity presented by the Trump administration's withdrawal from multilateral trade agreements to position itself as a champion of free trade and a defender of the rules-based international order. China's calculated silence is a reflection of its long-term strategic thinking and its understanding of the dynamics of power in the 21st century. While the trade war poses challenges for China, it also presents opportunities to advance its own economic and geopolitical interests. The trade tensions between the US and China are not just a bilateral issue. They have far-reaching implications for the global economy and the international trading system. The uncertainty generated by the trade war has already begun to weigh on global growth, as businesses around the world delay investment decisions and consumers tighten their belts. The trade war also threatens to disrupt global supply chains, which have become increasingly integrated in recent decades. Many businesses rely on components or raw materials sourced from both the US and China, and tariffs on these goods can increase costs and create logistical challenges. Moreover, the trade war risks undermining the rules-based trading system that has underpinned global prosperity for decades. The World Trade Organization, the body responsible for regulating international trade, is facing a crisis of legitimacy as the US and China increasingly resort to unilateral actions and retaliatory measures. The trade war has also exacerbated geopolitical tensions, as countries around the world are forced to navigate the complexities of maintaining good relations with both the US and China. This has led to a sense of uncertainty and fragmentation in the international order, making it more difficult to address global challenges such as climate change and nuclear proliferation. The question of whether the US-China trade war can be won is a complex one, with no easy answers. Both sides have dug in their heels, and neither seems willing to back down without significant concessions from the other. The Trump administration argues that its tariffs are necessary to force China to change its trade practices and level the playing field for American businesses. They point to some concessions China has made, such as increased purchases of US agricultural products, as evidence that their strategy is working. However, critics argue that the tariffs are counterproductive, harming American businesses and consumers, while failing to address the root causes of the trade imbalance. They contend that a more effective approach would involve working with allies to pressure China to make meaningful reforms, while simultaneously investing in American competitiveness. The reality is that there are no winners in a trade war. Both sides stand to lose economically, and the global economy as a whole will suffer. The longer the trade war continues, the more difficult it will be to repair the damage to the global trading system and to US-China relations. Even if a trade deal is reached, it is unlikely to mark the end of the US-China rivalry. The two countries have fundamentally different economic systems and political values, and these differences are likely to continue to generate friction in the years to come. The trade war has exposed the deep interdependence between the US and Chinese economies, but it has also highlighted the growing strategic competition between the two countries. This competition is playing out on multiple fronts, including technology, military power, and global influence. Navigating this complex relationship will require a nuanced approach that goes beyond tariffs and trade deals. It will require a clear-eyed assessment of US interests, a willingness to work with allies to address shared challenges, and a commitment to diplomacy and engagement. The US-China relationship is the defining geopolitical challenge of the 21st century. How the two countries manage their rivalry will have profound implications for the global order and the future of prosperity and security.